Hey everyone, it's Ben Hardy here, and in today's video we're going to be giving some big updates on the car market with everything that's currently happening. Before we get into this video, as always, if you're going to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then some of the information provided comes from Cox Automotive. Let's get right into it. Well, as always, let's start with the numbers and then we'll talk about what this means for the market. The first big number is inventory, 2.89 million units available. That was the beginning of this month. So that's an increase. But the day supply number, so this is the number that's based off of inventory versus how much is selling, 74 days. So the day supply number is above what's considered ideal, but it's actually gone down a little bit. And that's because although there's more inventory, there are more people that are going in and buying cars. Now the average listing price is still over $47,000. And so what we've seen with new car pricing is it's gone down by about 1% over the last year. So not a huge price decline. But what you'll see, a lot of sources will talk about how new cars are more affordable because although pricing hasn't changed all that much, again, a decline of 1%, wages have gone up over the last year and the economy is apparently really strong. And so it means that, yeah, cars are more affordable than they were before. I'll just leave it at that. Now, back to that day supply number, it still is a huge range depending on the automaker that you're looking at. Again, 74 days is the average. But if you look at like Toyota, they have a 31-day supply, so they still are very limited with inventory. But if you jump over and look at Ram, they've got more than twice the industry average. So they're well over 150 days at this point in terms of their day supply number. I mean, it's crazy to think of, how much inventory they have. But yeah, it's an interesting market. And again, it's the market we've seen over the course of the last year and a half where some automakers you can get some deals and other automakers not so much because they still don't have a lot of inventory. And it seems like they're kind of, at this point, arbitrarily just limiting the amount of inventory they have to keep those prices high. We'll come back to that point in just a moment. But yeah, depending on the automaker you're looking at will determine how much inventory that they have. Now, the next thing that I want to touch base on is the overall car economy kind of in the next few months because the Federal Reserve just met again and they said that they aren't lowering interest rates. So that means that the car economy is probably not going to change all that much over the next few months because interest rates are going to stay what they are. And again, the only thing that we have is that they might do a interest rate decrease in September, might. And if it is, it's only 25 basis points. So that's not real. That's going to change a little bit, but it's not going to change all that much with the market. And so what this means is we're pretty much just going to keep doing what we've been doing this year, where we're going to see fewer cars sold, but we're going to see them sold at much higher prices. Again, that average transaction or that average listing price over $47,000. And if you look at the pricing graph, it is the craziest thing you'll ever see. So what it is you kind of have this like slow linear increase in car prices over the years, which makes sense, right? That's just how things generally go, is they get slightly more expensive as time goes on. And again, in a linear fashion. The pandemic happens and obviously the price of new cars, exponential increase. You've got that just, it's insane to see how fast and how high prices got with new cars. I mean, you guys have all seen it. Now, again, things have gone down by 1%, but they've gone up by like 20+% over the course of the last few years. And automakers want to hold tight with this. So if you look at the messaging with automakers, they're saying that they're going to pull back on EV production, which we just talked about that in another video, how EV demand has actually declined. It hasn't stayed level, it hasn't increased, it's gone down. So that's some of the messaging. But then another part of the messaging is they're just going to build fewer cars in general. Automakers don't want to ramp up production and lower prices. They are more than happy with selling cars at these higher prices and selling fewer cars. And again, it makes sense, right? It's, if you look at the market, right, we're going to see about 15-ish million vehicles sold versus the, 17, almost 18 million vehicles that a market normally sells. So let's just say that there's a 2.5 million deficit, 2.5 million unit deficit in the market. Well, if pricing is up by over 20, 30% in some cases compared to prior to the pandemic, then that's going to put automakers in a situation where they're like, okay, well, I'm going to sell maybe, again, it's going to depend on the automaker, but I'm going to sell maybe 5 10% fewer cars, but I'm going to be able to make 20, 30% more on each individual unit, of course they're going to want to sell fewer cars and just sell them for more money. So yeah, not the most exciting news, but it looks like that's what's going to happen this year. And I just don't know how long this is going to stay and how sustainable this is, because it's going to get to a certain point where certain manufacturers are going to have low enough volume that they're not going to have the customers that they need to help them survive. And what I mean by that is automakers obviously make money when they build cars, but they also make money when they sell parts to fix the cars that they've already sold. And if that business shrinks because there's just fewer people buying their cars because they're too expensive, I don't know, I think that's something that could be pretty painful long term. It's too soon to really see what happens on that front, but what I can tell you anecdotally is on like a micro scale, there are certain dealers that have their service departments just basically dying right now. Like again, we're in a market where service departments are doing the best that they've ever done because they can charge astronomical amounts for service and way more than they've ever been able to charge. But you have some dealerships that nobody's going in and servicing their cars because they're selling so few cars that there's those customers, there's nobody to come in. I don't know. That's a video for another day, but let me know what you guys think about this whole market situation that we're currently in, where basically interest rates are staying the same, prices are staying the same, like everything's just staying the same, and the same is not exactly all that appealing when you have prices that are the highest that they've ever been. I'll see you.